Hey everyone, happy Thursday, July 6th. It's a little bit after 10:30 on the West Coast, and it's time for another market update. I hope everybody had a great 4th of July weekend holiday. Not weekend, I guess it was a long one. Left for a little bit of a short week in the markets. Monday was a part day, Tuesday was closed, and then yesterday, Wednesday was the first day they were fully going. But not a shortage of news, and unfortunately, not good news for the most part. So going back to last Friday, we got the May PCE inflation numbers. And so we know that this is the Fed's favorite form of looking at inflation. And the headline number is doing great. The headline number came down from 4.3 to 3.8 year over year. The core, however, which eliminates energy and food costs, remains sticky, as they say. From 4.7, it dropped to only 4.6. And we'll look at that in graph form. As you can see, this headline number is dropping pretty good, just kind of like how the producer price index one's been dropping pretty good. But this core part is just kind of hanging out there now. Really not much gains the last few months. And as we said, that's the Fed's favorite way to look at it. So not a lot of progress on that note. Markets did, reacted pretty positively to it, but not overly so. Kind of a so-so day. And then today we got a blowout June ADP, which is private payroll number. There was 225K jobs expected. It came in at 497,000 jobs created. So more than double what was expected. And as we know, the Fed is looking at the job market and saying, hey, the job market's super strong. So the more the numbers like this come out, the more likely the Fed is going to hike in the future. So this number came in way above expectations. Leading the gains again was hospitality. Almost half the gains were from hospitality. And like we talked about, that industry might be running out of gains to get. So I think, I think there are over 500,000 above where we were pre-pandemic now as far as jobs in that sector. And then construction, there was a lot of jobs added in construction. About 20% of the ads were in construction, which makes sense because the builders are feeling a lot more confident. Their stuff is going really good right now. So they're doing some hiring, which is good for the construction industry. Next thing we got today was June JOLT, so job openings reports. That came in a little bit lower than expected, but still a pretty strong number, 9.8 million when 9.935 million was expected. And then also today, it was jobs week, but every week we get these, was initial job claims. So initial job claims came in at 248,000, 245,000 were expected. So a little bit of an uptick, but not too much after last week's downtick. But like we talked about, last week's downtick had a lot to do with the federal holiday and a short week for people to file. So that came back up. The higher this goes, again, we don't want to see job loss, but the better it is for what we want to do, what the Fed to do. Purchase apps came in at negative 4% last week, negative 22% year over year. Still not doing good on that level. Not a lot of, rates being high and not a lot of inventory has definitely kept apps down. And the miscellaneous, we had the Fed meeting minutes were given out yesterday. So their last meeting, they released their minutes from it. So everything they talked about and kind of what we expected. The markets did not like what we read. Inflation is still strong, sticky, not coming down as expected. Job market's still really strong. So, kind of what we would expect, but still, more negative to pile on with this, the PCE number coming still, the core still being sticky, these job numbers coming in really strong. And then the Fed, seeing behind the scenes what they're talking about as far as continuing to hike rates twice more this year and things like that. So not a good week overall. And that led us to the average 30-year ticking up to 7.22. So almost 7.25. Not good news. We were just above 7 last week. Now we're going closer to 7.25, going the wrong direction. Like I said, all the news we're getting is not heading in the right direction. Tomorrow, very important, it's jobs week. So we get the BLS jobs report. So this is the big one. This is usually the biggest market mover. Considering the ADP came in, more than twice what expected, the BLS job report expected about the same, about 225K jobs expected. If that comes in anywhere close to that ADP number, not good things. We're probably going to see rates jump closer to 7.5. If that shows any weakness, then that might get us going in the right direction. We know we want an employment number, not necessarily to go up too much, but that's something they're taking a close look at. It's expected to actually drop from 3.7 to 3.6 in tomorrow's report. So if that happens, obviously the markets are going to not look kindly on that. A lot of really smart people that I look at, I've seen people think that the Fed's not going to budge until, unemployment rate gets to 4.5. So if it drops to 3.6, we're still, close to 1% away from that. So that could be a long way coming. So it all comes down to, narrative and what you think, where things are going to go in the future. So we have, if, rates stay elevated like they have been, a lot of that has to do with the economy going really strong and jobs going really strong. So coming off an Independence Day and 4th of July here in our country, it's kind of hard to root against the economy doing well and people's jobs being, created and jobs staying strong and people having jobs. So rates will still, there's a good chance rates stay on the elevated rate if the job market continues to stay this strong. If you don't think the job market is going to stay this strong, which a lot of people don't, and if you think the economy is going into a recession, which a lot of people do, then rates will come down with that. So it's one of those catch-22s where we don't want too much job loss, but that would make rates come down. But at the same time, we love hearing people have jobs. We love hearing people are making more money and all that. But that's causing the Fed to do what they're doing and rates going up. So, we just got to hang in there. It's a crazy market out there right now still. If someone can afford it, they should get in there because things aren't going to get better on the inventory side and prices are probably just going to go up and up, especially if rates do come down. So there's never a great time, perfect time to buy a house. So if someone can afford it, they're on the lower end, now's the time to do it. And then as far as, refinances, things like that, there's still, things like debt consolidation loans that still make sense. If you're paying off more on other bills than you are increasing your monthly payment by, then that's, worth it, net for you a month. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, let's hope for a more moderated number in the BLS jobs report, and then let's hope that inflation report, the CPI inflation report next week, comes in our favor. Until next time, have a great day, everybody.